Good evening. This is Coach Mike from WinningStockCoach.com. Going to go over market overview for the coming week. Last week was a kind of a weird one. We actually came up a little bit higher than I expected. I expected to reach this 1869.53-ish area, that it would take at least until Tuesday of the upcoming week. And we had a couple strong days, including Wednesday, that was pretty darn strong. Weird trading last week. Tuesday was an odd day, opening with a slight gap up, making a little bit of a run, giving back the entire gains of Monday before hard charge into higher highs for the day. Really left us with a hard week, but it's kind of interesting to see my target area was reached on Thursday, and then retreated back from. So it'll be interesting to see where we open in relation to that tomorrow. The one thing that's really important to me, more so than any of the charts, is how big of an earnings week the upcoming week is. So after seeing Google and IBM miss on their earnings, after seeing financials kind of mix so far, it makes it a little bit difficult to kind of convince yourself to one side or the other. And that's the important thing about what I do, is I don't try to convince myself that things are going to happen one way or the other. I simply trade in the direction they're happening. And that is actually probably going to leave me sidelined through Monday, and maybe even into the open on Tuesday, because of some pretty important earnings that we'll be seeing. Now, as far as the chart goes on the SPX or S&P 500, bit of an odd pattern. As of right now, still coming off of a lower low in the trade sequence. You can see as it went up and made the new high, you have a lower low, a lower high, a lower low, and still at this point a lower high. So it's going to be interesting to see the sequence made there. I do believe, however, that even if we make a higher high than this little blip over here the week before last, that we will see a pullback that gives us a lower or a higher low for good swing entries. I think the more interesting thing here is our weekly chart for the SPX, and that's what I'm showing now. You can actually see that after last week's, or not last week's, the week before last, pretty big red week, last week came back and basically just retraced the prior week. And if you look at where our close is, we actually have 1, 2, 3, 4, 5, 6, 7 weeks of really a pretty tight consolidation pattern. And even though we fell out of it pretty hard the week before last, we pretty much retraced very quickly right into that consolidation line. So at this point in time, it's going to, again, very, very interested to see how the biggest earnings week of the quarter is going to turn out, because that'll really shape the market. Last week on the DJI, the Dow Jones Industrial Average, we spoke about a potential bounce point for the DJI chart, and I've got that marked on my chart, the 16,004.77 cents. You can actually see that we came just above that, 16,015.32, and to be 60 cents off of that, I think is pretty close when you're talking $16,000. And then we kind of came in to a bit of a double top on Friday, and it put us right back in these consolidation channels, the horizontal channels, the pink or purple lines, however they show up for you, that we've been actually talking about for a couple weeks. Now, what I'm really concerned about is this high area in here. And the reason is the way the chart's been shaping up, it almost looks to me like it's giving the potential for what's called a head and shoulders. It's a pretty bearish overall pattern. So if we began to pull back, even if we were to go up a little bit in the upcoming week, if we were to get to about 16.5 or so and begin to pull back, this would be something I would look at as an indication of that head and shoulders setup. And how I would look for that is, a head and shoulders is not a confirmed head and shoulders until it fails the neckline, or basically the line created across the lows. So in that aspect, I might try to jump the gun a little bit with some small entries to the short side if it gives that pullback confirmation. And then I would go a bit larger when it fails the neckline. So that's kind of something that I'm looking at in relation to the Dow Jones Industrial daily chart. And then much like the S&P 500 weekly chart, after the week before last was a pretty heavy down week, last week just retraced the move completely and put us right back in our consolidation channel. So again, these market overview videos, the purpose of these is to explain to you what is happening and not try to project what might happen, not try to convince you of either side, but to try to convince you to have a plan based on what the chart does and not what we think it'll do. And what I see right now is right back in the consolidation pattern. So could it go up? Yes. Could it go down? Absolutely. Does anybody really know? I wouldn't believe them if they said they did. And the only ones that'll be right will be the ones that talk after the fact. So for me, my trades revolve around those two horizontal lines you see on your chart. We break above, I'll go long. We fall below, I'll go short. The RUT, the Russell 2000, is actually our more interesting chart because we've already began a pretty severe sequence of lower highs and lower lows. But if you actually were to look, and I'm going to draw a trend line, a couple different trend lines across some tops. And the reason I'm drawing these here is sometimes the way things set up for us, we could actually see this little high created be broken. We could see that high be broken and get caught in a bit of a bullish mindset. But really, to me, I would have to see this line that I'm coloring in red right now, this trend line broken, before I really was convinced that we were going to be in another bull market, a bullish swing. Now, one I haven't talked about a lot in prior market overview videos is the NDX, the Nasdaq 100 chart. The one thing I'd like to point out on the Nasdaq 100 is, though it was just a price wick, we actually did create a lower low than the last swing sequence this past week on Tuesday. For right now, does it mean a lot? No. But these trend lines you see appearing on the chart, these are all generated as potential trend lines from my weekly chart. If I go back to the weekly chart, you'll see that quite clearly. And after making that lower low, the indication I personally see is that even though the chart could go higher before it created a higher high, the overall sequence is pushing in a more downwards manner to make me look at any up move as a sidelines move for me. In any pullbacks that are accompanied by heavy volume to be opportunities to go short. So that's what I'm really looking at through the Nasdaq. It's no secret the Nasdaq's been beat up. It's fallen harder than it has since 2000 when the tech bubble era was going on. So that is something we got to look at, because let's look at the valuations on tech stocks. Are they as bad as they were in 2000? No. When the average tech stock was trading up at 55 to 62 times earnings, and now we're at 37 to 48 times earnings for average. But when we look at the big momentum stocks, your Amazon, your Netflix, your Tesla, even ones like Baidu, now granted these have come down a lot, but it seems like the air is already popped out of that bubble. So it'll be interesting to see, with most of those reporting earnings this week, this coming week, the direction the market is moved in relation to their earnings. After seeing Google and IBM miss on earnings, now let's face it, IBM's been missing on earnings for a year. So, big stock in the Dow, is it the one that's going to shape the market, which was how it was discussed a year ago? No. But Google, wow. And to see what we have coming up with Netflix on Monday and Amazon's on Thursday, two that I'm watching very, very closely. Qualcomm. We've seen, Intel and a few others of the IC manufacturing subsectors do quite well. Qualcomm on Wednesday, it's going to be one to watch in my opinion. Apple on Wednesday could be huge. Facebook on Wednesday could be really big as far as how they will affect the general market. Now there's a couple outside technology. Under Armour is reporting on Thursday. 3M's a big industrial that I think could have a lot to do. Government contractors, defense contractors like Lockheed Martin, Northrop Grumman, Raytheon, all reporting this week. A couple financials left in the mix. SunTrust is going to report on Monday. Visa will be reporting on Thursday. These are two that I'm looking a lot into because after seeing kind of mixed reportings and other financials, these are a couple, the kind of last string of them, of the major financials that I'm looking at for determining my mindset in that sector. When we look at retail, and I'm not big on retail, I don't play a lot of retail, but Cabela's is one reporting on Thursday, CAB, that I think could have some impact simply because of the type of following Cabela has and the brand loyalty Cabela shoppers hold. So it's going to be interesting for me to see their earnings as well. There's some medical device companies reporting this week. ISRG made nearly a $100 move recently, just a couple weeks ago, and it's retraced every penny of it. And on Tuesday, they're reporting earnings. ConMed, CNMD is on Thursday. Two that I'm watching, within that sector. A couple food and food service related. McDonald's and Yum brands. Yum is KFC, Taco Bell. They're reporting on Tuesday, the 22nd. And I'm looking at Dr. Pepper Snapple, DPS, on Wednesday as an important one as well after seeing Coca-Cola and their earnings. Along with Qualcomm, like I talked about with the IC manufacturing on Wednesday. Thursday, Broadcom, BRCM's been a very popular stock, and it's kind of leveled out and gone sideways here recently. Another big technology stock reporting this week, Baidu, BIDU, is going to report on Thursday, the 24th. And another one that's really, really important to me is UPS, also reporting on Thursday. I'm really interested in a couple of the industrial metals. AK Steel. AK Steel is AKS, it reports on Tuesday. And Reliance Steel, RS, is reporting on Thursday. And Starbucks, I'm not a big Starbucks follower, but it's a kind of a fun earnings play, fairly easy one for strangle or straddle type plays with options. And looking out a little more than that, Microsoft's been on a tear. I think the expectations, the estimates are already factored into the price. So I think it would have to be a pretty good beat for it to sustain any move it makes to the upside from there. So big earnings week coming up for us. A lot more than I've talked about, but the ones I've talked about are the ones that I'm watching. And I think that's going to really, really shape how we do and what we see performance-wise in the markets over the next few weeks. This is Coach Mike from WinningStockCoach.com. God bless you all on this Easter Sunday. and best of luck in your trading.